single 4-hour candle that's...
I'm just gonna stop it exactly right here. If we can go forward, we can see that you don't need any indicators to trade this strategy. That's the first thing that we had. The second thing, it has no chart data. I don't really know what does that mean. Because there are a lot of weights in this forex industry that we don't know what they mean. But from here we can tell that this is a simple strategy, a simple scalping strategy that only uses 4-hour candle. But how is it done? I don't know, but I will watch it with you guys and I will react and tell you whether the strategy is tradable or not. If it's something that I know, I will approve it. If I don't know about it, I will react from what I've seen. So let's carry
Sets
on.
up multiple high probability trades throughout the day. I tested this on Bitcoin, Forex, and gold, and I'm going to show you every single...
Okay, the first thing that I've noticed here is that this guy is doing a replay. So on replays, we know that replays, he can only come with the only good setups. Just to make this video a little bit saucy, he can only come with good setups. So we don't know whether this guy, this strategy is really what we are really looking for. You know what? Let's not judge a book by its cover. Let's see.
Trade, the wins and the losses live on the charts. By the end of this video, you'll have a complete 3-step system you can start using today. Okay. But here's the catch. Miss any of these 3 steps and the whole thing falls apart. Let's get started. First, let's understand the psychology behind this strategy. At the beginning of every trading day, big players don't chase price. They build a range, a zone where price is allowed to move while liquidity is being collected. That range is clearly shown by the first 4-hour candle of the day. Now let me switch to the
4-hour candle of the day. 4-hour candle of the day. The first 4-hour candle of the day. Meaning, what is it trying to tell us is that we have to wake up each and every day to wait for that 4-hour candle of the day. Maybe we are waking at 4 a.m. as a South African time. We wake up at 4 a.m. and I will be trading that candle. Is it possible? I don't know. Unless if ever he's trading a CRT. Yeah, CRT it might be possible, but we don't know yet. But let's wait.
5-minute chart, so you can clearly see this 4-hour candle price range marked here. The high and the low of that candle become important boundaries. This is where institutions observe order flow and wait for retail traders to make mistakes. Now here's where most traders go wrong. When price breaks above or below this 4-hour range, retail traders immediately think, okay, the move has started. They chase the break.
Before he goes anywhere, he's literally trading a liquidity sweep. There's a high chance that his strategy has a liquidity sweep. We wait for a market structure shift, and then we wait maybe for a retest. I don't know, but he's going there. Let's patiently wait. Remember, this is the first strategy that we're gonna learn from this video. But let's see.
But in reality, most breakouts fail. Price often breaks the range just to trigger stop losses and trap late buyers or sellers, and then it snaps right back inside the range. That move is called a false breakout, and that false breakout is not random, it's intentional liquidity. The strategy is built...
Yes, I've said it. It's internal liquidity. He's trading liquidity sweep, but the question is, how does he do it? Let's wait and see.
Around that idea, we are not trading the breakout, we are trading the return back into the range. Instead of buying highs or selling lows, we wait for price to show its hand, trap the impatient traders, and then we step in from the smarter side of the trade. That's the edge. Now open your chart and switch to the 4-hour
time. I hope you heard it. That's the edge, meaning you only trade that thing, you only trade the liquidity sweep. We haven't heard what's needed after the sweep, but that's an edge. We wait for a sweep before each and everything can occur. All right. So yeah, let's go with it.
Critical step here. Set your time zone to New York time in the bottom right corner. This ensures everyone's using the same reference point. Find the first 4-hour candle that formed today and draw horizontal lines.
Just to clarify it for South African people, you just go to Trading View, you change your time into UTC. Please pause the video and check the correct time zone that we have to use for this strategy to be, I don't know, maybe have a high win rate. We don't know yet until we test it, but right now it's about reacting to this video. So let's see the full video on how he does it. I ain't gonna disturb it right now. I'm just gonna go straight and watch this full strategy and see how he does it.
Lines at its high and low. Extend these lines to the end of the day. That's your playing field. Wait for this candle to fully close before marking anything. If it's still forming, you're too early. This is crucial because a forming candle can still change dramatically. Now, switch down to the 5-minute chart. Now you're hunting for two specific things in this exact sequence. First, a 5-minute candle that closes outside your range. Not just a wick poking out, but a full candle close beyond either the high or low line. Wicks don't count, the body must close outside. This is the false breakout we're waiting for. Second, price must re-enter and close back inside the range. This is your confirmation that the breakout failed and traders are trapped. This is the signal that price is rejecting that level. Both of these must happen on the same day you marked the range. Once the day ends, you reset and mark a new range for the next day. Here's where it gets interesting. If price broke above the range and came back in, you go short. If it broke below and came back in, you go long. You're fading the breakout and trading with the trapped trader's pain.
Okay, so far you can see I just left to add a little bit of what I'm seeing here. We are seeing a market structure shift after that sweep of the candle range high. So for a new person, don't go aggressive on these kind of setups. This is a model A. So as MSNR traders, this is model A. Price just took out the last low that broke the CR high. So it's very important of you to wait for a retest back to that OCL or classic A. That will give you a high risk to reward trade. So right now, let's see what happens or what's his model, entry model. Maybe he has a different entry model, but let's wait and see.
Stop loss. Place it at the extreme of the breakout candle.
He just entered aggressively. I really hate entering aggressive. I don't like entering aggressive. Obviously, he's gonna adjust his stop loss a little bit. I think he's trying to cover these minor things. He doesn't want to teach you people these minor things. If ever you can literally check it, he did not enter on the first candlestick there. He did not enter on the first candlestick there. Why? Because he knows that he needs a market structure shift. So the second candle, you can see on the second candle that there was a break, right? There was a break, and exactly on that break, that's where he entered after the market structure shift. But he did not wait for a retest. Why? Because he already played this replay. He already knows maybe there might not be a retest. So he's just trying to have views on his YouTube channel. I don't know the YouTuber, but let's see. Maybe this trade might hit stop loss. We don't know.
The exact high or low where price broke out. This protects you if the breakout actually continues. Take profit, 2 times your stop loss distance. This gives you a 2-to-1 reward to risk ratio, meaning you only need to be right 40% of the time to be profitable.
That I was talking about. As you can see, price after entering, price went straight, it dipped straight to the downside. It never came for a retest. That's why he chose this replay and he chose to enter aggressive. So if I was this guy, I could have missed this setup. Why? Because price wouldn't have came back and collected my orders for precise entries, for better entries. This is not the best entry because the risk is high, and the moment you take an L, you'll want to take a revenge trade. Why? Because you lost a lot of money, so you'll want to retrieve the money that you have lost, and that's not how you have to trade. You have to have an edge. Yes, as he said, you have to have an edge, but I hate what he did here. Aggressive trading is not the best way to go. Wait for a retest, and then you'll have a perfect trade. For now, this is not good.
Long term. Like this. Let me show you exactly how this looks on real Bitcoin charts. Okay, here on the Bitcoin 5-minute chart, we have our 4-hour range marked. Okay. Watch what happens here. Wait, price drop.
Before we go anywhere, it hasn't yet closed with the body. So we want to see it closing with the body.
And closes below the range low. See this red candle? It completely closed below our line. Now we wait. And here, this green candle closes back inside the range. That's our signal. Entry, long position right here at the close of this candle.
Not bad. On this example, he literally took a trade after the first candle that entered the box. So I won't gonna say much. I'll still wait for my market structure shift, wait for my hashtag model one, and yeah, that's when I can literally look for those buys.
Stop loss. Placed at the exact low of the breakout move right here. Take profit 2 times the distance marked here. Now let's see what happens. Price moves up and boom, hits our...
Hold it exactly around that area. Price rejected the market structure shift and then it went straight back for that retest. So this is model one. If ever you can literally take a clean look, you will see that this green candle engulfed the last red candle that broke outside. So this is model one. That's an order block. So we could have traded that order block exactly when price retested that level of area. That's when we could have traded maybe 50% of that order block, because it doesn't have much to retest on. So it would have retested only 50% of that order block and could have given us a better entry with a higher risk to reward ratio.
Take profit target perfectly. That's a clean 2R gain, one trade, double our risk. Same day, different opportunity. Price is now trading higher, and look, this candle closes above the range high. That's our...
He said same day, different opportunity. How? Or maybe it's because he used a different pair and then he used BTC this side. I just hope that's the reason, because it's impossible for it to be a same day and different opportunity, whereas you said we have to trade the first 4-hour candle of the day. So how is it same day different opportunity? Unless if ever you are trading two different pairs. Try, well, next time whenever you do such a video, please be specific so that we can know that same day different opportunity on different pairs, yeah.
First condition met. Now we wait for re-entry, and here it is. Price closes back inside the range. Entry.
You heard it, re-entry. A re-entry, meaning you can trade the CR high and trade the CR low. Okay, not bad. Let's see.
Position at this candle close. Stop loss. At the high of the breakout candle, right here, take profit, 2 times risk, set here. Watch the price action. It drops steadily and hits our target. Another 2R profit. This is the power of trading false breakouts. The momentum is already on our side. Now, here's a trade that didn't work. And I want to show you this because losses are part of trading. Look at the setup. Price broke below the range, then closed back inside. Textbook setup. We go long, stop loss at the lows, take profit at 2R. But watch what happens. Price moves up initially, looking good, but then reverses hard and hits our stop loss. That's a 1R loss.
Okay, and this is right down on this situation. I could have also took an LY, because the red candle that went out, it was not engulfed, but we can see the last high that took out this air low was literally broken with the body. So that retest exactly on classic A there, we could have bought exactly on classic A. Let's see if ever he can play this video. This wouldn't have been a loss if ever classic A still holds, because we can see prices already rejecting with the body exactly on that classic A. So it's not classic A, it's classic V. So reported is classic V. So let's see.
Important. Not every trade wins, but because we're risking 1 to make 2, we can afford to lose and still be
moving. Prices already moving. You see, the moment you have the logic of a scenario, you literally have a better view of trade. On this situation, this was not a loss, but using the strategy that is being taught here, you could have lost. But if ever you try to add some minor things that the person who is teaching this thing doesn't add, it can help you with the same strategy. Wait for a CR high to get swept with the body, and then price comes back, market structure shift, price pulls back to OCL or classic V or classic A, and then you take the trade. Yeah, it could have been
profitable overall. Here's the crucial insight. You don't need a 90% win rate to be profitable. With a 2-to-1 reward to risk ratio, you can win just 40% of the time and still break even. Anything above that is pure profit. This strategy averaged 72% across all markets. That's powerful. Here's a scenario you'll encounter often. Price makes a massive drop below our range, way beyond the low. If we placed our stop loss at the extreme low here, it would be huge, maybe 50 or 60 pips. Oh, that's too much risk. Instead, look for the nearest key level. See this small support level here? That's where we place our stop instead. This keeps our risk manageable. Take profit still at 2R from our adjusted stop, and look at that. Price rallies back up and hits our target perfectly.
Okay, let's try and clarify this thing. You can see that trading this strategy you don't only need price to break with only one candle. It can break with a lot of candles and break back inside. It can still be a trade as long price broke outside and break back inside the candle range. It can still be a trade. So far, what we have learned is that here we are not trading fancy things. We only want that liquidity sweep, breakout, break in. That's all. I think it might work.
Another 2R gain with controlled risk. Pro tips to improve your results. 1. When you see a massive breakout, price shooting way beyond your range, don't blindly place your stop at the extreme. Look for the nearest key support or resistance level or an order block and use that instead. This keeps your risk reasonable. 2. You can take multiple trades per day from the same 4-hour range. Don't think one range, one trade. If price keeps breaking out,
he just answered our question. Indeed, is the same 4-hour candle. He's been using the same 4-hour candle. As you can see, if ever you remember what I asked if ever this guy he's trading two different pairs because he said he got two opportunities same day. I was like, how? Whereas you said we trade the first. So he just answered, you don't need to trade only the CR low. You can trade the CR low, trade the CR high, breaks back inside again, just like that, on the same 4-hour candle. On the same 4-hour candle until price doesn't do this thing that we want to see happening. Maybe it's a good strategy though. It's a good strategy, but we can improve it to the better. It can be better. We can make it better. Let's go.
And re-entering, keep taking the setups. 3. Combine this with trend analysis. If the overall daily or weekly trend is up, favor the long setups over shorts. If the trend is down, favor shorts. This simple filter can boost your win rate even higher. This is the basic
I simply love that. I simply love following the trend, making a trend your friend. Yeah, it has been a best strategy I've seen so far. It's simple, doesn't have a lot of things that I could have added, because if ever I was the one who's teaching this strategy, I could have added a lot of things so that we can have a better entry. But from what I'm seeing here, he's not looking to, he doesn't care about fancy things. He only needs that 1:2 and risk to reward as a key of this strategy. So yes, sir, let's finish up the video. Let's see what he has.
Version of the strategy, and it's designed to work across different markets because it's based on market behavior, not predictions.
Okay.
The real strength comes when you combine it with tools like volume, market structure, or trend context. But even on its own, the logic holds, because one thing remains true across all markets. Not every breakout follows through.
I know some of you will be asking me, why do I prefer volume? Volume helps you to determine the strength of the market, right? Whenever price is going up and then it rises, it means the market is very bullish, like it's widely bullish.
Remains true across all markets. Not every breakout follows through. Most traders react emotionally. They chase price. This approach does the opposite. It waits for confirmation and focuses on logic over excitement. Before applying...
Okay, I'm just gonna close it here. He has already said everything I've needed to hear. So with dedication, pure dedication and pure risk and management, this strategy will be a very good strategy. All you have to do is be patient, wait for the 4-hour candle, the first 4-hour candle of the day, every day, Monday to Friday, any pair, and do this. Simply wait for a break, and then you wait for a break back inside. Yeah, and then I believe you are done. But according to myself, I will wait for a break of structure. After that break of structure, maybe you can go aggressive from that break of structure, because There will be a lot of fake outs. There will be a lot of fake outs more than, if ever you can notice here, there's a fake out there, there's a fake out here, there's another like there will be a lot of fake outs. If ever you can notice on this video, there are a lot of fake outs, and he is not pointing out those fake outs. So be a little bit creative and add something that can help you improve your entries. Thank you.